Want to know the difference between trading and investing? More important, which one's best for you? Well, keep watching, because by the end of this here video, you'll know just that. Good day to you folks. Money Jim here, your money pal. So today we're going to look at the difference between trading and investing. And there sure are plenty.
Did someone say trading?
Well, look at who it is. My nautical cousin Mackerel Jack.
And I'm the best trader on the 7 seas, don't you know?
Of course you are, Jack. Now why don't you come and show how trading compares to investing?
Sure I will. Buy, buy, buy. Sell, sell, sell. That's the name of the game.
I think what Jack's trying to say is the main difference between the two is how long you hold on for. See, in investing, you might buy stocks, mutual funds, ETFs, whatever it is, and hold them for years, decades even, maybe even forever. The goal is gradual gains over the long run, but typically something like retirement.
I haven't got time for that. I could end up in Davy Jones's locker by then. It's get rich quick all the way for Mackerel Jack.
Like Jack said, traders generally looking for quick wins by making a trade, earning a fast buck, and closing the trade. They might only hold on for something for a few weeks, a few days, maybe not even a day, even just a couple seconds.
That's more like it. Get in, blast them with all of your might, and get out with the treasure.
For those of you who don't speak pirate, what Jack's pointing out here is traders often use leverage. That's borrowing money to increase the size of your trade and magnify the potential gains, but it also does the same for the losses. Most investors simply invest their own money. What else, Jack?
Well, I like it best when there be stormy seas ahead.
Good point. Traders and investors have a different take on volatility. That's the ups and downs of the markets. See, most investors view it as something to sit tight through, and maybe some even get worried about it. For traders though, volatility gives them more opportunity to trade. See, they can make money with markets going up or down, whereas investors are generally long only, which means they only benefit when things are going up. So Jack, how much time do you spend trading?
Every hour of the day I can spare, and for as long as me candle burns in the night too.
Trading sure takes up way more time than investing. You can invest with hardly no time or effort at all. They even said it's an autopilot if you're making regular deposits into your brokerage account. Trading, on the other hand, requires a ton of work. Technical analysis is called, trying to predict the future price changes by spotting patterns or trends.
The trend is your friend.
Why don't you go tell him some of them trends, Jack?
Well, now let me see. You got head and shoulders, triangles, double top, double bottom, cup and handle, I really like that one, flag, wedge, pennant.
Traders sure got some funny lingo. Now investors can still do plenty research and analysis too by looking for the intrinsic value of an investment, or in other words, what they think it's really worth. That's by looking at the quality of the management or the company, its competitive edge, the outlook for its industry, and so on. So while stock picking investors want to know as much about the business as they can, plenty of traders got no interest in that at all, might not even know what the company even does for a stock being traded.
That's right. All I want to know is if that price is going up or down.
One of the most overlooked parts of making money is risk.
Risk? Ha ha ha! Mackerel Jack laughs in the face of risk.
Now, both investing and trading sure got their risks, but they're managed in different ways. Traders often use stop-loss orders, which automatically sells if the price dips below a certain level.
Oh, I use them all the time.
Which limits losing trades.
Yeah, well, can't win them all, can you?
Sure can, Jack. And oftentimes, traders also set price targets to trigger automatic sales and close out successful trades. So while trading sure can be speculative and mighty risky, there's plenty risk management in action.
Yep. Take risk very serious, I do.
Investors often don't have any plans to sell at a particular price, whether that's high or low. They expect drops to bounce back and often just let gains run and run. Managing risk for investors mainly comes from having plenty different types of investments in their portfolio. So while some are going zig, others going zag. You might have heard of it, diversification.
Diversification? Pfft. More like diversification.
Let's talk about taxes.
Don't talk to me about taxes. I hate them. Scourge of the 7 C's they are.
See, capital gains taxes are normally higher for shorter term gains than they are for long term ones. And because traders all about short term, they got more taxes to pay, paying higher rates more often. Investors usually pay low rates of tax. Because they sell far less often, they might not have no tax to pay at all some years.
All right, stop rubbing it in.
And what about costs?
What about him? I haven't got any costs. I trade commission free. Ha ha.
That's what you might think. Trading's never been cheaper, that's for sure. But even if you use a commission-free broker, there's still costs. You just can't see them.
What? 'Cause of my eye patch?
Not 'cause of your eye patch, Jack. You don't even need that thing anyway.
True, but then I wouldn't look very piratey, would I? Arr.
Like I was saying, even if you're using a commission-free broker, there's still costs, and that's the spread. Spread is the difference between what you paid and what you get if you sold. Spreads are real small for trades on big companies, but real high for smaller ones and penny stocks. And even if the spreads are small, once you add them all up, you'll see they can be a real big drag on your gains.
Shiver me timbers. The only thing I want dragging is me anchor.
Investors pay fees and charges and spreads too. Because they ain't buying and selling nearly as often, they don't pay them as often neither. So in general, investors' costs are lower than traders.
So what? I'd pay 10 times the cost if I could get 100 times the gains.
Yeah, about that, Jack. Because investing's all about the long term. Investors benefit from compound growth, getting gains on top of their gains. And that's what gives them supersized returns over time. Compounding.
Confound it, more like. I'll show those investors I'll go so big and make so many trades they'll be begging to join me crew.
So how's the trading been going lately, Jack?
Yeah, not so good.
Well, if it makes you feel any better, you ain't alone. See, when you trade, you're not just up against all them other amateur traders. Oh no, you're also going up against the pros. That's the best in the business, with way more data than you'll ever have, and they can trade faster than you can too.
That kinda explains things.
That don't mean you can't make money. You can even make a full-time living out of trading if you really want, but the odds sure are stacked against amateur traders. And here's the reality. Most of them lose money, whereas most investors grow theirs in the long run.
But I want action, excitement, and I want to see my gains now.
Trading sure gets a pulse going more than investing, but if it's excitement you're after, go to a sports game or an amusement park. Trading sure can give you big highs, but you can also get crushing lows, or if you lever it up to your eyeballs, even get wiped out completely.
Yeah, had a few of those.
To make it as a trader, you gotta have plenty knowledge, time, and discipline. Investing is simpler, takes up way less time, and because of compound growth, has the potential for bigger gains in the long run.
You may be right, Jim, but you'll never catch me investing my money for the long term. There's this guy on TikTok driving a Ferrari, and his course promises to make me a millionaire in 5 minutes.
See you, Jack. So there you have it, trading versus investing. Which one would you choose? See you next time, sunshine.